Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, February 10th, 2010. Well, folks, we have a little bit of a mixed day on Wall Street again today. It's been one of those weeks where it's just been unbelievably volatile. We've seen the market go up and down ever since really the reversal on Friday where we had that bottoming tail put in. And again, a bottoming tail is a direct signal that the markets most likely will start to trend higher in the short term. And they have done that, but it has not been an easy road. This market has gone up and down intraday from day to day, up and down. And we can go back all the way to Friday and see that action day after day. Here's Friday's activity. There's a reversal. On the daily chart, this creates a little bit of a bottoming tail. Sure enough, that's an upward signal. Now, off of that huge reversal, what you got was a continuation on Monday morning right here to the upside, and then inside bar consolidation. So this is a beautiful sideways consolidation pattern. Notice the lighter volume. That signals that you're going to continue to move up, and sure enough, on Tuesday, that was the case. Tuesday, the markets rip higher on a gap up. You have a little bit of selling as the dollar rallies higher. Then the dollar gets crushed, and the market just rips higher all the way up to about 108. Now, 108 is a master level. For those of you that follow the Research Center videos on a nightly basis, you can see that that master level is on the daily chart when I show it to you. Sure enough, off of that, the dollar starts to rally back off the lows and the markets come in. Today, we had an early surge in the dollar as the markets got crushed on that. Now, remember, as the dollar goes up, the markets are coming down. Now, what was the cause of this dollar move to the upside? It was comments from Ben Bernanke, Fed Chief Ben Bernanke, as he came out and basically implied that down the road they were going to have to raise interest rates. Funny thing is, this is the first time he's actually had to say that directly. All right, he's not really touched on interest rates even in any statement he's ever made. Today was the first time, and sure enough, that caused a little bit of a spike in the dollar. And as that happened, the market started to tank. We tanked all the way down to this double bottom level and gap fill. Notice the gap fill right here, double bottom, gap fill. At this point, I called out a beautiful long in the markets to go long, and obviously we did end up making some good money. As you can see, the markets have trended sideways to higher for the rest of the day. Volume is minuscule today, folks. Why? Well, you have a huge snowstorm in New York City. Really a lot of big firms are shut down. A lot of people did not go into work. That's creating a little bit of a lighter volume situation. So with that, that's why we're seeing this lighter volume situation. And with obviously lighter volume, oftentimes you'll see a sideways market. Now, the beauty about today's action is it's actually consolidating again. So you're seeing consolidation again in the markets off of yesterday's big move up. So on the daily chart, you can start to say to yourself, all right, well, does this mean another move up? And it very well may. I mean, believe it or not, it very, very well may. So keep an eye on this market as we progress here into the close and see where we end. Right now, the SPY is trading up 4 pennies on the day. That's a direct correlation with the S&P. The S&P right now is flat on the day. The NASDAQ is up 1 point, and the Dow is down about 2 points. All right, so you can see a really unbelievably flat market right now, kind of making you wonder here exactly if we're just going to close for a flat day while this snowstorm passes through New York City and through Wall Street. Now, on a technical basis, your levels are as follows. You have a ton of support down here, folks. All right, ton of support right in this range. And then if you go below that, you're going to look at the little break to 107 right here to 106.90. So right below this actually is a ton of support. So I don't necessarily know if the market's going to have an easy way of breaking through it. All right, breaking through this level. And then if you do get through the 106.90, you're going to go all the way down to the 106.50 level or so, right in this range, 106.25, all the way down to the lows of the day at 106.10. So again, if you're looking for the big levels to watch today on the downside, watch 106.90, 106.10 to 106.25, right in this double bottom range, which is also double bottom from yesterday, and gap fill from the day before, which goes back to Monday. All right. On the upside, if you continue to rally up, this is the big level to watch, right up here at 108. 108 is a double top from yesterday. You also have a major trend line in the intraday, and if you break through that, you're going to go up possibly as high as 109. 109 is a possibility there, folks, so be alerted to that as the markets could easily move up. Now, again, folks, I'm holding a couple longs still in this market. I've unloaded a couple longs over the last couple days for some profits. Now, what we're going to look at here is a couple of the longs that I'm currently holding. VZ is one of them. I'm looking to unload this relatively soon. It's had a beautiful move up over the last few days. Was all the way down in the low 28s, and now it's at 29. That's a beautiful play right there. But again, looking to unload that shortly over the next day or so, most likely, on a little bit more of a pop. Other stocks to look at, we'll keep an eye on the oil trade. Again, I unloaded the UCO, which is 2 times long oil yesterday on the pop. And again, it's trading sideways to up today after some big gains. Made about 10% in 3 days on that trade. That was given out in the Research Center just among all the trades out there. Again, we gave out some great calls over the last few days as we continue continue to just nail the markets left and right. We urge you to come join the Research Center. We're going to be introducing text message alerts for any time we put out a trade in the Research Center, text message and email alerts. You want to get on board for that, folks, if for nothing else other than to make the massive amounts of money that our members are able to make on our calls. Have a wonderful rest of the day. We'll talk to you soon.